Hey there, accountants. I hope all is well, and I pray that as you're viewing this video, that you're in the best of health and spirit. This video will cover Chapter 10, Preparing Financial Statements and Reports from QuickBooks Online for Accounting, 7th edition. Upon completion of this chapter, the student will be able to do the following: create an income statement, create a balance sheet, create a statement of cash flows, create an accounts receivable aging summary, create an accounts payable aging summary, create an inventory valuation summary, customize and save reports. So in chapter 9, we added adjusting journal entries to our wild water sports company. In this chapter, we'll add several new reports, and at the end of the chapter, perform similar tasks based on cases assigned by the instructor. There's 4 standard reports that exist in financial accounting: the income statement, the statement of stockholders' equity, the balance sheet, and the statement of cash flows. QuickBooks Online doesn't have a report for stockholders' equity. It does have the others, however, along with a host of other reports, so we can understand the underlying business events that have occurred during a particular accounting period. We'll be exploring the AR, which stands for Accounts Receivable Aging Summary, the AP, which stands for Accounts Payable Aging Summary, and the Inventory Valuation Summary reports. We'll also be customizing them by adding columns and removing cents. In this section, we'll create an income statement. Intuit decided years ago to call this report profit and loss rather than income statement. So even though this may confuse the accounting professional and accounting student, it resonates with the small business under that uses QuickBooks Online. So just keep in mind, profit and loss and income statement, they mean the same thing. It is a report that details the revenue and the expenses for the period. So those terms are synonymous. This report, again, is designed to communicate the revenues earned and the expenses incurred for a business over a month, quarter, or year. Intuit defines this report as follows: shows money you earned, the income, and the money you spent, expenses, so you can see how profitable you are. That's not exactly how an accounting professional or an accounting student was taught, but I mean, it's close enough. So accountants define the income statement as a report reflecting revenues less expenses to derive net income or net loss. Intuit doesn't want to change its wording to accommodate us. So we basically just, it is what it is. And again, sometimes this is a learning opportunity for clients, as you can explain to them that, hey, when I refer to income statement, it's the same thing as profit and loss pretty much. So thus, revenues are the same as income in the profit and loss report. And for simplicity, we'll refer to it as the profit and loss report. So the first step is to open the internet browser. I have my internet browser open. In step 2, open the QuickBooks Online account. This is already open. So for step 3, we'll click reports, and it's asking to type in profit and loss. So I type in the profit and loss, and then I select it. And then from there, I scroll to the top of the report to reveal the period. Here it's showing that it needs to be January. And then again, we want to change the year to 2027. So January 1st, 2027 to January 31st, 2027. So we run the report. I'm going to close the navigation bar so we have more space. So we run the report. And then we look at the information here. We see that there's $339,000 of total income. And then we see that our bottom line is $180,719.22. Perfect. So that ties. So we click collapse. And then again, we see the same report essentially. So by defining the accounting period as the month of January, the only events reported are those that were recorded during the period. All reports in QuickBooks Online allows us to drill down to specific transactions that are recorded in that specific period. So we drill down by clicking an account on a report, and that reveals a transactions report for that account for the period. So by double clicking a specific transaction in the transactions report, it'll reveal a specific source document such as an invoice, sales receipt, cash receipt, and bill. So it's asking us to click the $337,000 next to the sales account. So we click it. And then from there, we see the transaction report for the sales account for the month of January. So here we see we had a sales receipt on the 4th from Southtown Water Sports. We had 2 invoices from Performance Rentals, and then we had journal entry number 9 and journal entry number 10. And that is essentially how we derived at the $337,000. So it's asking us to click on the Performance Rentals text to view invoice 1002. So we open up invoice 1002. And we'll just close out these things. So here we see the invoice. We see the invoice number, and obviously what you see on the screen is a little different. The formatting is a little different, but same thing nonetheless. We have the invoice number. We have the name of the company. We have the individual to whom we sent the bill to, etc. We see the both Malibu Sportsters and the Malibu Sunset. So the information ties for the most part. We click X to return to the transaction report, and we click back to report summary to return to the profit and loss. We click the drop down arrow in the compare another period. So here it says compare another period. We click the drop down, and then it wants us to select percent of income. So we select this, we select customize, and then we check without cents, and we run the report. So by running the report, we see this information here. We see that of the total revenue, sales made up 99% of the total 339, and service revenue made up 1%. So it does the same thing for all of the expenses as well. We scroll down, and then it's asking us to save the customization. So we save customization, and we type profit and loss custom. Then we click save. And then from there, we have the option to export it. So we select the export option, scroll up, we export it. And then it's asking us to export it to PDF. And then we essentially decide that, we can save the Excel report. So once it's saved, we open the file. And then from there, you enable it. All right. And then it shows us the profit and loss report. So in this section, we'll create a balance sheet that reports our company's assets, liabilities, and stockholders' equity as of a specific date, not a period. One thing to keep in mind is that balance sheet tracks the assets, liabilities, and the owner's equity for a company as of the date of inception. The profit and loss, however, is for a specific period in time. The balance sheet is for at a point in time. So very important to know the difference. When we create this report, QuickBooks Online is going to provide us with the ability to define the period in which the underlying account balances would reflect in their transactions report. The default for QuickBooks Online is year to date. So we continue from where we left off. We open our navigation pane, we go to reports, and we type balance sheet. All right, and we see it here, balance sheet. And then we type in the dates. We want January 2027, January 31st. And I'll close the navigation bar. We click run report, and then it asks us to collapse it to see a modified view. So we see our checking account is $99,358. Accounts receivable, $120,770. So we see our total current assets, $769,003.88. So we're looking at a partial view of the balance sheet. So it's asking us to click the accounts receivable balance of $120,770 to view the transaction report for AR. So once we click on it, we see that there's invoice 1,002, 1,003, and then there's a payment from Refugio. So we note that the ending balance of $120,000 matches the balance sheet report. And it's asking us to click $70,000, which is a payment from refugee. So we can click the amount, or we can click anywhere, honestly, on this line item, and it'll take us to the receive payment. And we see here, the customer was refugee on January 12th, 2027, paid us $70,000. So we click X, we return to the transaction report, or we return rather back to the report summary. We click customize, we check without cents, and then we click the change columns text. So we click change columns, and then from there we want to select percent of column. We click run report. And then we see here for the checking account, we see of the total assets, the checking account makes up 12%, AR makes up 15%, etc. So we check it, make sure everything ties. We see on the left in the textbook that there is a partial view. From there, we select save customization. You have balance sheet custom. We save it. And then we do the same thing. We click the export button. And then we can export it to Excel if we've done before. And we can save the worksheet wherever we want to save it. Select enable editing. And this is a good feature if you want to send it to clients, so that way they can review it. You can export it into Excel. You could also export it into a PDF. Now we look at the statement of cash flows. In this section, we'll create a statement of cash flows which reports on a company's operating, investing, and financing activities. To create a statement of cash flows, we'll do the following. We continue from where we left off. We go back to our navigation bar. We select reports. We type in statement of cash flows. And then we type in the dates, January 1st of 2027. And then we have January 31st, the ending date of 2027. We run the report. And then here we see it's showing us our operating activities. We have net cash provided by operating activities of $56,858.88. And then we also get to take a look at our investing and financing activities. And we see the cash at the end of the period ties $169,358.88. So we scroll down the report and we click on common stock, which we would find under financing. And then we see the details, and on January 21st, 2027, WB Investments invested $10,000. So we click anywhere on the account. So that way we can see the bank deposit for $10,000. We click X to return to the transaction report, and then we select back to report summary to return to the statement of cash flows. We select customize. We select without cents. We run the report. And then from there, we click the down arrow next to the text adjustments to reconcile. All right, so let's export. All right, so let me make sure I am not missing anything. All right, so here it wants us to reduce the amount. Let's see. Oh, perfect. So this is what it wants us to do. So we click the down arrow next to text to adjustment. So we click this. So that way it basically made it much smaller, essentially. So this is what the line 11 is asking us to do. Instead of having it expanded, we collapse it pretty much. So it matches what we see on the screen. We save customization, statement of cash flows, custom, and we click save. Then we move on to the next page. In this section, we'll create an accounts receivable aging summary. This reflects unpaid invoices for the current period and for the last 30, 60, and 90 days as of a specific date. Aging summaries, they help us to find customers who may be delinquent in their payments and help a company estimate the need for an allowance for uncollectible accounts. Aging information, it has to take into consideration the company's normal terms for a customer. So for example, it would not be an issue if a lot of customers are not in the 60 plus category, but the normal terms for those customers are net 60. However, it would be an issue if the normal terms are net 30. So what this simply means is that if the customer needs to pay us within 60 days or within that time frame, not too bad. But if the customer needs to pay us within 30 days and are net 60, that's a problem. So we continue from where we left off. We select the navigation bar. We click reports. We type in the accounts receivable aging summary. And then from there, for the date, we're going to type in January of 2027, the 31st, the day we run the report. And in here, we see the report. Essentially, everything is current. So we're pretty much good. Florida eSchool owes us $2,000. Performance rental owes us $118,770. So we click on the $118,770 owned by Performance Rentals. And then from there, we see the invoice for Performance Rentals. Their payment is due February 5th, 2027. And then we click on, again, you can click on anything that's hyperlinked. We click on the invoice number, and then it takes us to the invoice and shows us essentially how much they owe us. We click the X, we go back to the report summary, and then we return to the AR aging summary. Next, we look at the accounts payable aging summary. So in this section, this is essentially the reverse. Before we looked at customers owing us, now we look at situations where we owe vendors. So we go back to the navigation bar, we select reports, and now we type in accounts payable aging summary. We update the date. We want January 31st, 2027. We run the report. And then here we see we're current. We owe Allstate $2,500, Best Buy $6,000, Malibu Boats $1,750, and TIG $180,000. So we click the $6,000 owed to Best Buy. And then it's asking us to click the $6,000. Again, you can click anywhere on this hyperlink. It's going to take us to the bill, where it shows us that we owe $6,000 to Best Buy. So we close out of this, we go back to our report summary. Next, we look at the inventory valuation summary. So in this section, we create an inventory valuation summary that reflects each inventory item's quantity on hand, its average cost, and the resulting valuation as of a specific date. So we continue from where we left off. We click reports from the navigation bar. We type inventory. And we go to the inventory valuation summary. We change the date to January 31st, 2027. We run the report. And then here we see that the total value for the boats is $221,600, total parts $1,750, for a total of $223,350. So it's asking us to click on the 5 representing the quantity for the number of wake accessory packages. We click on it and we see here that there's the inventory starting value and then there was a bill. So we click on the bill to reflect the purchase of 5 wake accessory packages. And we see here that the vendor's Malibu Boats, $1,750 is owed to them. We click cancel, or we can X out of it pretty much. And we go back to the report summary to return to the inventory valuation. So in this chapter, we didn't add any business events, but we did create basic financial statement reports, including profit and loss, balance sheet, and the statement of cash flows. In addition, we drilled down beyond those reports to transaction detail reports and to source documents like payments, invoices, bills, and so on. We created some analytical reports to learn more about accounts receivable, accounts payable, and inventory.